Hi everyone, let's go over my Elliott Wave scenarios on Bitcoin from the medium time frame to the micro, starting on the medium time frame where we are looking for a WXY to the downside in potentially a double zigzag, which means wave W over here is a zigzag in an ABC. X can be any corrective structure for then another Y535 to the downside, where the most common target for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the current high of X over here, which gives us a target between 21.7k and 20.1k. And that is quite interesting because I have some additional support at these levels over here. As you can see, a blue box around 22k and also another one over here around the 1.236 between 20.2k and 20.6k. Now in this scenario, preferably this trend line will be broken for a little bit of a fake out. So we have a 3-wave W, X then moves above this trend line, or if we already move to the downside, I prefer to see, for example, a 1, 2, and then a move to the downside. But it would be nice for this trend line to be broken before continuation to the downside. And another reason why downside has a higher probability is because on the Bitcoin chart, this low has been taken with a big wick over here to 23.6k, and there is a very high probability that all the different charts are going to align to one another by taking this low as well. Besides, as you can see, we have a double bottom over here, and that is an absolute magnet for price as well. If we now look at a wave X scenario, this is one of the scenarios that we have been keeping an eye on with the group as well, where in this scenario we are then looking for a triangle. Now a couple of things that are important is 4 out of the 5 waves have to be zigzags. If one wave is not a zigzag, it's usually a complex structure in a double, triple zigzag or a triangle itself, and volume should be decreasing. Now volume has been decreasing till the price action that we got late afternoon over here, and that makes us then wonder, is wave C and wave E, or wave D, sorry, and wave E already in a zigzag A, zigzag B, zigzag in wave C, complex structure in wave D, and then a WXY over here, and then this being a zigzag in wave E, meaning that then the triangle would look like this, D ending over here, E ending over here, and voila, that could be a potentially finished triangle. Now what is important in this scenario is that if price goes above this high over here, then of course wave E can't be wave E because that's not allowed, especially if we go above C, that's a clear invalidation. And also if price moves to the downside, that is absolutely fine in this particular scenario because that's what you're then looking for if we're looking for a bigger W, X and a Y. Now clearly this wave D is quite short in time compared to A, B and C, but that is okay. And this wave E is even shorter in time and didn't hit the upper trend line, but that's no problem as a wave E is usually either below or above the trend line. Preferably what I usually like to see is wave E going above because it's a fake out scenario, so that's always nice. But in this scenario wave E would not hit the triangle. So then the question of course is the triangle finished? And in the upcoming days we will get more clarity about this scenario, but most importantly is that this wick over here is high volume, higher than we got over here in wave D, as well as this potential wave E in this red candle to the downside, so this could be the beginning of a bigger move down. Another scenario that kind of leads to the same result really is a WXY, where this is then again a 3-wave structure in a ABC, but then this move to the downside is a first impulsive structure to the downside, which is not really something I prefer. I would prefer the triangle scenario over this one, because if this is a wave 1, then we have a 1, 2, 3, but a very long sideways shallow 4, and then a wave 5 to the downside. This doesn't count too nicely as an impulse. It looks a little bit better as a 3-wave structure, but mainly this wave 4 is incredibly long in time compared to a very short wave 2, which is not really what you want to see. However, the result would be quite similar. The only difference, however, is that in this scenario you'd be looking for new prices over here, a immediate low to the downside. Wave 3 is usually the strongest and biggest wave, while in a triangle scenario you're going to be looking for this on the lower time frames after a wave E. So you're then going to be looking, let me actually go to the 5-minute over here. you're going to be looking for a first impulse to the downside. So we then have wave 1, 2, 3, eventually 4, looking for a new low in a wave 5. It is important price takes this low over here to at least have a 5-wave structure to the downside, which could then end a potential wave 1. Now over here, this target box at these lows has not yet been hit between 25.7k and 25.9k. And what is quite nice is that this scenario was shared at the beginning of yesterday, the 26th, move down to the target box, move up to the target box. Now price did go above this target box as we saw during the live stream earlier, but it's now on its way down. So hey, you know, $200 difference here at the high, but this was definitely an interesting scenario over here, where we had that move to the downside, move to the upside, but instead of returning at the target box, we went a little bit higher. Now, funny enough, actually, I stopped the stream over here because of other stuff while hitting this pivot. And this pivot is important because it was the beginning of this gap over here. So it was an area of resistance as mentioned. And on the lower time frames over here, we also had bearish CVD divergences quite soon actually after I quit the stream, stopped the stream. Now in this scenario, we're then looking for 5, potentially ending over here around this target box area. Quite nice, 25.7, 25.9. And then I'd be looking for a bit of a bounce towards the upside. Would be very nice if we then also get some bearish CVD divergences for then a potential 1, 2 and continuation to the downside. Invalidation at the moment is if price would move towards the upside here without making a new low. So continue to the upside and hit the golden pocket over here, taken from the 2 to the 3, which sits at 26.5k. So that is very important. Something else that I like to say has to do with the high over here. So during the live stream, what I mentioned is that it is very, very important for price to at least, first of all, wait for a range, right? And you want to see a new high to be made to get a clear 5-wave structure. You wanted to see these highs broken. However, price moved down. One of the areas of support we were looking for was a retest of the white target box over here, but we had high volume as well as bearish CVD divergences on the 1 minute, which I'll show you in a second. First of all, the 3-minute chart, CVD over here. Price moving to the downside. I think we closed the stream somewhere over here. Eventually, price going down, price moving up. Bearish CVD divergences over here on the chart. We have lower highs on price, but we have a higher high on the CVD chart. Indeed, you can see lower high on price with these highs as well, and the high here, but a higher high on the CVD. Bearish yellow CVD divergences, price moving to the downside. And when we then arrived at the target box, what we could see over here was more bearish CVD divergences. Over here, lower highs on price, but look at the yellow line, you can see, oops, if I zoom in even more, lower high on price, but a higher high on the yellow line as well as on blue. More CVD divergences while being at potential support, because we're talking about this wick over here for the 1 minute bearish CVD divergences. Quite a clear sign that price wants to at least take this low and continue to the downside, where if you take a Fibonacci from this low to this high for a potential wave 4, the invalidation is candles closing below the 0.5, and on the lower time frames, well, you know, clearly this happened, of course, price just pushed to the downside, there was no chance, invalidating an impulse, and yeah, looking for lower prices indeed. Bearish CVD divergences already explained, and if we then end with the probabilities of the different scenarios, I mean, I kind of shared like one scenario per time frame really in this particular video, but it does not look too good. And actually, to be honest, it is quite difficult to find a scenario where we're going to move to the upside once more. I do have like an idea, first a WXY, but then W over here is a zigzag. Y would then also be a zigzag. That's not what you want to see in a double combo over here, so that's not really allowed. Another scenario I put on my chart earlier today was a potential W, triangle X and a Y, but now this volume is quite high compared to wave A and B, so that's not great, of course, for a triangle. So yeah, I need a bit more time. I need more price action to see if there's any real bullish scenarios, but at the moment, the highest probability scenario on all the time frames is price moving a little bit lower and definitely looking for this area of support for then a potential bounce and then potential continuation. Let's see what we get. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.